We turn our focus now to a major move in the mining sector. The US-based precious metals producer Coeur Mining has struck a definitive agreement to acquire Canadian miner New Gold. It's an all-stock deal valued at approximately $7 billion US, and it's a clear sign of consolidation in North America's mining industry. Now, the combined group is expected to generate around $3 billion of EBITDA and $2 billion of free cash flow in 2026. Well, it's a pleasure. Coeur Chief Executive Mitch Krebs joins us now. Mitchell, thanks indeed for talking to us.
Yeah, thanks for having me. Nice to see you.
Listen, so you've said the deal is less about synergies and really more about what these two companies represent together, right? I suppose I'm wondering, how will you measure success post-closing, Mitch? I mean, will it be margin improvement, return on capital, dividend growth, or is it something else entirely different?
Yeah. Good question. It really is about what these two companies can be together versus on our own. This transaction allows us each to get better, faster than we could on a standalone basis. And some of the ways we can measure success next year after we get past the closing in the first half of the year will not only be meeting the kind of cash flow numbers that you cited of $3 billion of EBITDA and $2 billion of free cash flow, but really the combined, for example, the combined balance sheet, the cash build that this company will have. We'll end up with an investment grade credit profile, so much lower cost of capital going forward. Watching that lower risk balance sheet build cash, and then allowing us to take that cash, reinvest it back into these operations where there are a lot of organic high return opportunities. Things like the K-Zone out at New Afton in British Columbia, for example, real big drivers for long-term value for the investors in this combined company. We will likely still have excess cash above and beyond all of those opportunities, and we'll be able to approach a capital return program in a much more robust, sustained, higher fashion, where really all options will be on the table because of the benefits of this combined company. So there will be a lot of things that we'll be able to do together that we couldn't have done on our own.
Yeah, and I want to expand on those last few points, right? Because New Gold brings two Canadian assets. You mentioned them, New Afton copper gold mine in British Columbia, and then you have that Rainy River gold mine in Ontario, right? That's into your portfolio now. How will you prioritize integrating those assets? I mean, optimizing performance with Coeur's cost structure and strategy, by the way.
Yeah, and we have a good playbook there that we just used during the SilverCrest transaction that we announced about a year ago. We closed that in February of this year, and we integrated that Las Chispas operation that SilverCrest brought to the company over the last several months. And really what the expectation was everybody that worked at Las Chispas, we needed them to continue to do exactly what they were doing, because that's what was creating all the value that attracted us in the first place. And the same is true here at New Afton, where the C-Zone is just now ramping up and is going to be a key driver of near-term production growth and cash flow growth. And at Rainy River, they have an interesting transition taking place from open pit mining to underground mining. That's the same transition that we went through at our Palmarejo mine in Mexico a few years back, so we're very familiar with that. And in both cases, maintaining a higher level of exploration investment to really unlock the potential that both of these operations bring to the combined company. So, in terms of priority, those key drivers for both of those operations are equal. We're just excited to have the opportunity to bring them in and hopefully have them be a part of this rocket ship of cash flow and production growth that we've been creating over the last few years, and hopefully that will be to the benefit of not only all of the operations and all the employees, but to our investors.
Yeah, I want to go back to those numbers, right? I mean, my question is, why are you confident of meeting those quantified targets of $3 billion EBITDA and $2 billion free cash flow next year. What gives you that sentiment or that confidence?
Yeah, well, between the 7 operations, these are near-term, fully funded, already loaded in the chamber growth, right? So this is not longer-term, subject to financing kind of growth. This is very near-term and happening before our very eyes. In fact, we both announced very strong third quarter results just last week that showed that both companies are in the early innings of this real sharp free cash flow inflection, and so it's already happening, and that gives us the confidence that as we go into 26 and beyond, that the growth is there. If anything, those numbers that you and I just both talked about, those are run at consensus prices, which are quite a bit lower than current spot prices. So I think, in general, the investment world is still catching up to where we are in terms of the current price environment. And so there's still upside to go above and beyond what we're already talking about.
Now, the all-stock format means existing core shareholders will own, about 62% of the combined company, with New Gold shareholders holding around 38%, I believe. Given Coeur's share price, the fact that, it pulled back following the announcement, how do you respond to concerns, Mitch, around, let's say, dilution, value creation, and timing of Coeur's shareholders?
Yeah. Well, and there's always this dynamic when a company acquires another company using shares with a premium, that you'll see pressure on the acquirer's share price in the initial days and weeks, and this was no exception. In fact, it's exactly like what we saw a year ago with Silvercrest. Share price, the Coeur share price declined in the near term and then outperformed thereafter. In fact, Silvercrest shareholders from a year ago to now are up triple on the investment if they decided to hold on to their Coeur shares, and we see the same kind of opportunity here for the New Gold shareholders. On a per share basis, this is an accretive transaction. That's a very important factor or criteria for us whenever we look at any kind of external growth opportunity. So we see this as being, building a much better business, and for shareholders of Coeur, they're going to have a better, more resilient, more stable company going forward, and that's really a function of not only what we've been building here internally with expansions and the Silvercrest transaction, but now adding on the New Gold component and their 2 high-quality, low-cost Canadian operations. It's a better business that investors will own going forward.
Yeah. I want to wrap up with just that sentiment. I mean, looking ahead, how will you decide where to put your money, Mitch? I mean, it's keeping the new operations running smoothly, investing in exploration perhaps, or just looking out for more acquisitions?
Yeah, well, we are a return on invested company, capital company. In fact, our long-term compensation is driven by ROIC. So we allocate capital to the highest returns. So we'll go through that disciplined, rigorous process and allocate capital to the greatest good where we can unlock the most value. But the things that come to the surface there will be things like the K-Zone expansion in the future, brownfield exploration, not only at Rainy River, but across all of our assets. We have a huge amount of value to unlock, and ROIC opportunities to drive our ROIC, which is already in the mid-20s and one of the sector leaders, even higher as we keep pulling on that lever going forward. So it's very much of a disciplined capital allocation framework that we apply to how we will allocate all this cash flow going forward.
Yeah, certainly we'll keep our eye on it. Well, Coeur Chief Executive Mitch Krebs, thanks very much indeed for chatting to us.
No, thanks for having me. I appreciate it.